Hey, investors. I recently talked to a very strong investor who had quite a few properties and had run into a lot of issues, not because of the physical property or necessarily their tenant, but because of compliance issues. So today we're going to talk about 5 compliance items that real estate investors need to be aware of and keep track of to make sure they stay on track for their goals. To a lot of investors on an ongoing basis, and a lot of the same things keep coming up again. So I'm here to share with you a couple of compliance items that you should be aware of to make sure you stay in good shape. The first one is rental property inspections and code items. Now this really depends on the local municipality or your county, what they require. But it's very common across the board that almost all municipalities have some type of either ongoing rental inspection or else an inspection that occurs when a property is sold. Now, or maybe they have both of those things. So it's very important if you're buying a property to make sure you contact the local municipality and ask, is there any type of inspection that needs done for the property to be transferred? And also very important, if there's an ongoing inspection that takes place, that the property has had it recently, so any outstanding items that could be safety or code violations are fixed before you as the owner become the inheritor of those problems. So if you're an ongoing owner and you're just making sure that you stay on track with your inspections, get ahead of those things. Because if you wait until the inspector comes out and gives you a list of 27 things to fix, you're going to be overwhelmed, it's going to cost you a ton of money, and you're going to have to pay for them to come back at least another time, maybe 2 more times. So find out what the requirements are, fix them ahead of time before you have your inspection, and you will save yourself money and a lot of headache as well. So make sure you stay on top of those inspections instead of just avoiding them and then having to deal with it when it piles up. The second thing is if you have any short-term or mid-term rental properties that are provided basically furnished units on a shorter-term basis, make sure that you are paying hotel-type occupancy taxes if any of your stays are shorter than 30 days. So if you have a longer than 30-day time frame, most municipalities consider it not subject to a hotel type occupancy revenue tax. But if it's shorter than 30 days, pretty much across the board, you will need to pay it. Now, if you're using sites like Airbnb and VRBO, they will collect that and remit it on your behalf, so you don't have to worry about it, except for the fact that some municipalities still require you to submit a record. So I myself do own some short-term rental properties, and we use Airbnb and VRBO to book it. They collect the tax, they remit the tax, but we still have to file a form that says, here's all our bookings, and we don't owe any other tax. And the reason for that is if I took any direct bookings outside of those platforms, I, as the owner, would be responsible for collecting that tax and sending it to them. So make sure if you're doing direct bookings, you're collecting the tax and you're sending it to them. Also, if you have any properties that are commercial properties that have a business as a tenant, a lot of different counties or municipalities have a business type use tax that if they have a business, they're doing business within that area, they have to pay a special use business tax. So if the business is not aware of it, not reporting it, it falls back on you as the property owner to either pay it or make sure that the business is aware they're paying it. So if you have any businesses as a tenant, make sure you're aware of that one and check it out. Not every municipality or county has it, but if they do, you need to be aware. The third one is if you have any commercial tenants that you're recording leases and or paying any transfer tax. Now you might say, what is a lease? Why would I pay any type of transfer tax? Well, some states actually require a transfer tax for leases of a certain length or longer. So in Maryland, if you have a lease that's 7 years or longer, that's a 0.5% transfer tax that's paid. And if you have a lease that's 7 years or longer, you must record it in order for it to be legally enforceable. So the two go together. And if you have shorter term, generally you're not worrying about it, but if you have a longer term lease, super important that you're paying that tax and recording the lease as required for your legal protection. The fourth one is if you have some subcontractors and or employees. Now, this is probably nothing new, but if you misclassify anyone who should be an employee as a subcontractor, that's going to be a big problem for you later, so don't do it. If you do have legitimate contractors, you need to provide them with 1099s. I know, it's a huge pain, I agree. But if you have small businesses, which a lot of subcontractors are, you need to give them the 1099 of everything you're paying them if it's over $600, which usually it is. If it's a large corporation, like it's, your bill to the utility company, those you don't need to do 1099s because they're a big corporation. They're already recording their income and paying taxes as a corporation. But a lot of smaller companies, you do have to file the 1099. So just make a rule that before you pay the bill, you have the W-2 with their information. So later on, you don't have to go chasing them when it's tax time and you're stressed out, and so are they. The fifth one is the keeping of the books. So this is the one that my investor friend, they had kept good records for all the items that we just talked about. It's going to make their life so much easier when it comes time to have an audit from the IRS if the state ever comes knocking. If their local municipality says, hey, where's our use and occupancy tax? All those things, if you make sure you keep good records, documentation of everything that you have done, you will thank yourself later because then it will be easy to resolve any type of issues that arise because you have the paper trail and the documentation to back it up. So your future self will thank you. Just make sure you put the time in to keep good records so that you can be glad in the future that it's not going to be an issue for you. So those are 5 compliance items that investors need to be aware of. And if you found some value from this video, please like and share and subscribe. And if you're looking for investment properties in Pennsylvania or Maryland, please reach out to us. We're always happy to help.